Open banking and open finance are on an upwards trend, and we're here at Money2020 Amsterdam to find out exactly why that is and how come open initiatives are spreading around like wildfire.
So in terms of key trends, it probably won't be much of a surprise to hear that we're still looking at credit as the dominant example of where open banking is enabling much better, appropriate access to credit that's affordable for a wider number of people. The other trend continues again to be access to services for SMEs. So 2 years ago, for example, accounting software providers didn't have bank integrations. Now, in an open banking developed market, if you don't have a bank integration, then you have no business model, because it just makes such good sense. And small businesses are quick adopters of anything that will save them time and money.
You start to see a multitude of use cases. So initially very much in the financial services space, you saw a lot of open banking use cases. It's maturing now. It starts to come to, for example, e-commerce use cases where, at retailers, you can both online as well as at point of sale, you can start to buy your goods and services using Pay by Bank. Really good example is if you go to, for example, DIY stores in France, you can now buy your kitchen or a sofa, for example, by scanning a QR code and paying through your iPad using straight your bank account. And I think the last element is the emergence of premium APIs. And this is where frameworks like SPA or in the UK commercial variable recurring payments really come in.
I think there are two different tracks that we're currently following in the EU and the UK. The EU obviously has the FIDA regulation that's progressing through the legislative framework, and we're hoping to see it landed, I would say, at the end of this year. That is going to provide a holistic framework for data access across many types of financial services like savings, mortgages, insurance, investments, and we will obviously see that being rolled out across the member states through the implementation timeline. I think one of the challenges might be that it could lead to a fragmented approach across Europe. And so there really does need to be some thinking about how we have a harmonised implementation.
Green fintechs have a very exciting opportunity with working with and collaborating with banks. The first thing that we do is we help banks to understand and measure the footprints and the carbon footprints of their customers, so individuals and small businesses. But also what we do is we give tailored recommendations that the banks can then support with their products and services to help decarbonise, whether that's through lending or savings, to take climate action.
What are the main business opportunities and unique use cases in regions outside of Europe?
Access to credit is a very important one, but we have examples where the credit is now intuitive with the business that's going on. So using open banking data from the platform in which finance is embedded, for example. A good use of this would be, for example, access to trade finance. You have containers that are passing through a shipping port, and as they progress along their journey, it automatically unlocks the next level of funding as progress is made towards the end destination. So that really sort of clever use of data. We see other examples in insurance where you have travel interruption insurance, and that automatically kicks in when it sees that the plane you've booked is running late. So these solutions that are tied in with what the consumer or the business customer actually is trying to achieve, and then does it intuitively and with ease and with less paperwork, these are the models that are going to be really sort of developing further in the next few years.
We're overlooking sometimes that payments, we have the single euro payments area with standardized credit transfers, standardized direct debits and so on. And the other lines of business, mortgages, insurance, pensions, whatever, we do not have the same level of standardization, which means, I believe, that it will start fragmented and not pan-European. These other lines of business are, in terms of standardization, pan-European standardization, way behind payments, which will inevitably lead to a fragmented stock, if at all. We see it already happening per country, per whatever line of business, and probably they will see in the other lines with the same long and painful road to pan-European harmonization, but that will take quite a long time, I'm sure.
I think that we're still on the cusp, the start of this journey of what can be achieved if we have open finance and smart data. And I think over the coming years, we're really going to see the benefits of that, so long as we can move towards implementation in a harmonized way, which means that consumers actually understand. They don't need to understand the process, but which means that they can understand the benefits that they can actually come to them from engaging with open finance and smart data.
Since you mentioned SPA, what else must be done to encourage banks and fintechs to participate in SPA?
Looking at the banking or asset holders in SPA terms, I think the main challenge now is to create a sense of urgency and awareness at the business levels. We've been talking at technical levels, people that program APIs and so on, but now it becomes very important, I believe, that at the business levels, people start to understand what the importance of SPA is. It's not just something, it's, let's say, the open banking pan-European solution holding the promise to have truly homegrown, as the European Commission says, European solutions as an alternative to the non-European solutions. Won't name any of those here, but you know who we're talking about. So the strategic importance has to sort of get to the minds of the guys that make the business decisions. SPA is trivial in terms of investment, and that is why it's probably not top of mind, because it's trivial in terms of investment, but strategically extremely important, I believe.
Yeah, and we see a lot of interest from merchants in SPA because they have seen what variable recurring payments can do in the UK, and they've really started to question us. So there's an equivalent in SPA called dynamic recurring payments, and it enables a lot of use cases. It improves the user experience for a single media payment, so you can do a one-click payment, but you can also really do a lot of those, recurring use cases for streaming services, bill payments, even installment payments. So as a company, Token is very, very interested in this development. We see a lot of demands from merchants, and we would like to see how we can work together effectively with the banks to make this a reality. And now there is a good compensation for the model for the banks. We hope that effectively the banks will start to adopt this and make it part of their overall roadmaps.